Before we start, please pay attention to the video related to the House Rule of Bank Negara Malaysia display.
Welcome to Sasana Kijang, a center of knowledge and learning excellence established by Bank Negara Malaysia. Vehicles entering the premises will be subject to a security inspection at all entrances. All guests are required to walk through the metal detector as part of the security requirements. Guest access to level 5 and the office areas from levels 1 to 5 are strictly prohibited without prior approval. Sasana Kijang is a Wi-Fi-enabled area. Please contact the event owner for the Wi-Fi password. Please set your handphone on silent mode to ensure the smooth running of events. Our auditorium seats are equipped with microphones for audience participation. To use the microphone, press the button located on the panel at the side of your seat. A red light indicates that the microphone is ready for use. Press the same button to deactivate the microphone. Smoking is strictly prohibited indoors. Should you wish to smoke, please proceed to the designated smoking areas. In case of an emergency, please remain calm and follow the directions of the safety officer. In the event of a fire or bomb threat, immediate evacuation is required. During a medical emergency, please contact the security counter or any of the available auxiliary police for medical emergency response. Thank you, and we hope you enjoy your experience at Sasana Kijang.
Ladies and gentlemen, for your information, there will be 3 presenters who will be presenting their research paper in this second session. Before we start with the presentation, allow me to remind you a few rules that presenter must follow. The presenter is given 10 minutes to present the research paper. The first bell will ring as soon as the presenter begins their presentation. The second bell will ring 2 times to indicate the presenter has 2 minutes left to finish the presentation. The third bell will ring 3 times to indicate the end of the presentation session. After the presentation ends, the Q&A session will begin immediately. The allocated time given is 5 minutes and the bell will ring 2 times to indicate the end of the Q&A session. For online attendees, you may submit your question in the Q&A tabs. All presenters must adhere to the time set and are kindly requested to be aware of your turn of presentation to ensure the smoothness of the presentation session. All presenters are required to remain seated in the presentation room until the end of the session as a sign of respect to others presenters. Without further ado, Let us welcome Yang Berusaha Dr. Maria Elina binti Noor, a senior lecturer at the Faculty of Applied Science and Technology from University Tun Hussein on Malaysia, as a moderator that will conducting the second session with the team harnessing modernization for next generation statistical analysis.
Thank you, MC. Bismillahirrahmanirrahim. Assalamualaikum and good afternoon. A warm welcome to everyone. First and foremost, I would like to thank all of you for attending today's scientific paper presentation session. I am Maria Elena and I will be your moderator for this session. For today's session, we will have several esteemed presenters who will share their research. Each presenter will have 10 minutes to present their paper, followed by a 5-minute question and answer session. I would like to kindly remind everyone to put your mobile phones on silent mode to ensure the session runs smoothly without any interrupts. Without further ado, let's begin with our first presenter. Mr. Muhammad Nur Hakim bin Muhammad Rosli from Institute Maklumat and Analysis Persaraan Buruh Ilmiah, which will be presenting a paper titled Analyzing the Default Risk Profiles of Firms' Business Sectors Using Selected Risk Indicators and KMV Merton Model. Please welcome.
Yes. Okay. Bismillahirrahmanirrahim. Assalamualaikum and good afternoon, ladies and gentlemen. My name is Muhammad Nur Hakim bin Muhammad Rosli, and I am a research assistant from Ilmiah Dozem. Today, I will be presenting my study on analyzing the default risk profiles of firms' business sectors using selected risk indicators and KMV Merton model. Without further ado, let's start with the introduction. Default risk, by definition, is the probability that a borrower fails to make full and timely payments of principal and interest. There are several causes of default risk, such as high cost, fund misappropriation, poor judgment, and also fraud. The effects of default risk are significant, such as harder to obtain credit, higher required returns, and increased interest rates. There are two methods in this study, such as KMV probability with other selected risk indicators that is best for assessing default risk. There are two objectives in this study. First, to analyze the level of default risk of firms using KMV Merton model, credit ratings, and the selected risk indicators. Second, to provide the risk profile of certain firm sector based on the analysis of the first objective. Moving to the methodology. The methodology of this study begins with data collection, followed by estimating the probability of default of firms using KMV Merton model, followed by implementing the selected risk indicators, predicted the credit ratings, and analyzing the default risk of firms before finally constructing firm risk profiles. Ladies and gentlemen, I will now explain the methodology in further detail. Starting with the first method of data collection. We gathered data from non-financial sectors between 2010 until 2020. The data obtained included detailed information as seen here, such as share prices, market value of equity, outstanding shares, short-term and long-term of borrowing of firms. Not only that, the data is gathered from multiple databases such as Thomson Reuters data stream, Refinitiv Icon database, and also firms' annual reports. Next, let's look into the process of estimating the probability of default of firms using KMV Merton model. First, we multiply each of the daily stock prices with the outstanding share to get the daily market value of a firm's equity. Next, we calculate the daily book value of liabilities by defining it as a total borrowing of the short term plus half of the long term borrowings. In the third step, The daily assets market value is calculated based on the sum of the firm's book value of liabilities and market value of equity. First step involves generating the daily natural log of the assets market value returns to get the average return and the standard deviation. And lastly, calculating the distance to default, or known as D, followed by estimating the annual default probability of the firms using the equation as seen there. Moving to the third method, implementing the selected risk indicators. There are 6 different risk indicators selected in this study. It starts with leverage ratio. It is calculated by dividing total debt over total assets minus total liabilities. Next, liquidity ratio, which is acquired from the firm's annual financial summary. The third indicator is firm size. It is calculated by using the formula of loan total assets or natural log of the total assets. Next, return on assets, or for short ROA. ROA is calculated using the formula of net income divided with total assets. Moreover, there are also cash. Cash is calculated using annual cash plus cash equivalents dividing with total assets. And lastly, volatility. Volatility is obtained by multiplying sigma, or it stands for standard deviation of asset log returns, with the square root of 252. So ladies and gentlemen, we will look into the fourth and fifth method. The fourth method of predicting the credit ratings shows the table of MARC, or stands for Malaysian Corporate Rating Default Rate. The table categorizes various credit rating that indicates the highest rating from AAA down to the lowest, which is C. Moving to the fifth method, estimating the level of default risk of firms. The table under the fifth method focuses on estimating the level of default risk. The table is associated with different credit ratings, and it simplifies complex data into an easier format. So both tables are sourced from MARC and serve as a reference points in this study. So by using these default rates, the study can benchmark the risk levels of different firms and sectors, providing a standardized measure of credit risk. The final method will be constructing firm risk profiles. The table seen here is one of the examples made in the study in the category of construction and engineering. The table shows there are low level of risk that consists of firms that have predicted rating of AAA, AA, and A. Medium level consists of firms that have predicted rating of BBB and BB, and high level consists of firms that have predicted credit rating of B and C. Value of risk indicators for each category depends on which firm is in each category. MARC probability of default rate and available actual credit rating are also provided in the table as a comparison, and from there, risk profile are then constructed. Ladies and gentlemen, we will move to the result. The table shows the descriptive statistic of DD and PD for each rating category. DD stands for distance to default, whereas PD stands for probability of default. There are two important results that can be gained based on the table here. First, higher PD values indicate a higher default risk. Larger PD values implies a higher likelihood of a firm defaulting. This is evident from the maximum and the minimum PD values for each rating category, as seen on the table there. Higher PD values suggest that these companies might have to pay more to borrow money and might find it harder to get loans or investments. Another result is inverse relationship between credit rating and default risk. As the credit rating declines from AAA down to B, the average PD increases. Firms with the higher credit ratings are less likely to default compared to those with the lower ratings. It is crucial for investors, lenders, and credit rating agencies to assess the risk associated with different firms based on their credit ratings. Another important result is seen in the table here, which shows the risk profile of firms for all sectors. There are three levels of risk, which is low, medium, and high. Low medium of low level of risk shows that firms are financially stable and powerful. They have strong credit ratings, indicating a likelihood of default, low likelihood of default. They also have lower borrowing costs and also have higher investor confidence. For medium level of risk, the firms are in a balanced financial position with a moderate risk. They have somewhat stable but vulnerable to economic fluctuations and market changes. The investors and creditors will approach them with caution, demanding a higher return for the seen risk. And lastly, high level of risk. High level of risk provides greater risk of default and financial distress. They have poor credit ratings, which indicates instability. They also have higher borrowing costs and reduced access to capital. And finally, we will look into the last part of the presentation, which is discussion and conclusion. There are four different findings that can be obtained in the study. First, predicted ratings closely match the actual ratings that indicates high accuracy in calculation. Some firms have high leverage and low volatility, but low probability of default and vice versa. Due to the inconsistent value, it is challenging to determine the exact impact on default risk. Therefore, leverage ratio and volatility do not always indicate a firm's default risk. In conclusion, it is crucial for this study to provide early warnings to selected firms about their financial status. It is also to help future investors to choose the best firms to invest in. And the study also not only focused on Malaysian non-financial firms, but also on a broader scope. Thank you, that's all.
Thank you, Mr. Muhammad Nur Hakim. Now we will open the floor for questions. You can raise your hand if you have any question. No question? How about the participant from the online? If you have any question, you can post to the online Q&A features. It seems no question. Are you sure? Okay, if there is no question, so we can move to the second presenter. Thank you, Mr. Muhammad Nur Hakim, for the insightful presentation. Now, I would like to welcome Dr. Norli Anida bin Abdullah from Center for Foundation Studies in Science from University of Malaya with the paper titled Comparative Analysis of Time Series Clustering, Dynamic Time Warping and Euclidean Distance Measure in Price Index of Companies in Standard of Poor S&P 500 Index. Please welcome Dr. Norli.
Okay, Assalamualaikum and good afternoon, everyone. My name is Norli Anida Abdullah. I'm representing my team member from University Malaya and also University of Leeds. Okay, so I'll be talking about how do we compare. We use two different methods to cluster time series data, which is we're comparing either using Euclidean distance or I think it should be next slide. Okay, yeah. So we're comparing between Euclidean distance measure and also the dynamic time warping, or in short, DTW. Okay, so if you can see the plot on my left-hand side, so the plot over there shows that the data that we are using the price index for the standard and poor 500 companies from 2013 to 2018. So we're trying to find the clusters of these companies. So if you can see that there's like an performing companies at the top, I can tell that that is actually NVIDIA. Okay, and some of the good performer is Microsoft as well. All right, and we also have like a very stagnant performer. All right. Okay, so that's the illustration of differences between Euclidean and DTW distance that usually we use it in the clustering for time series data. Next one. Okay, sorry. I think it's quite not very okay. Okay, so the data consists of 505 companies with almost 1,300 observations, which means that for one series or one company, we have 1,003 time or observations here across the year, right? So we first transform the data to price index at time t. So why do we do that? That is to normalize the data and to ensure comparisons, relevant comparisons between the series, all right? And then we do the data smoothing using simple moving average. So why do we do that? That is to exclude any short-term fluctuation and to highlight trends in a longer run. Okay. So this is the process, the clustering process that we do. So we apply the k-means clustering using three distances. The three distances to three distance measure for centroid updating when we do the clustering. That is the DTW average, DTW median, and also Euclidean distance measure. All right, so the DTW median and Euclidean, so sorry, I couldn't really see the, okay, so the DTW distance, it actually takes the minimum distance between point A on a particular time t to the point B at another series. Okay, so it is actually quite computationally expensive to get the DTW distances, all right, compared to the Euclidean distance, right? Okay, so to get the optimal number of clusters, we use the elbow plot. Okay, and that is actually the formula for to calculate the within cluster sum of squares, and the clustering performance was evaluated using RAND index and also Davis building index, or in short DB index. Okay, so the DB index, it measures the average similarity. You can see that from the formula. It measures average similarity ratio of each cluster by considering intra and intercluster and also the cluster size. Okay, so here's the results of the optimal number of clusters that we found out using different number of clusters, right? So if you can see that the lowest or the steepest gradient that you can see from the elbow plot gives us 3 to 4 optimal number of clusters, right? And the RAND index and also the DB index, the value shows the index is close to 1 and 0 respectively, so which confirms that the DTW average is actually a better distance measure compared to Euclidean to find the clusters of S&P 500 data set. Okay, so the three classes that we found out can actually be regarded as a high, moderate, and also low investment return. And this is the sectorial breakdown of the three clusters. So you can see that the first clusters, the majority of the companies in that clusters is from energy. And the third majority of companies in cluster 3 is from industrial, health, and also IT sectors. So the possible reason behind high investment return cluster might be due to health insurance expansion, technological breakthrough, gaming boom, growth of cloud computing, and aerospace and defense subsectors. And as for the low investment return cluster, it may be due to oil price crash in 2014 and oversupply in market. Okay. All right. So the key takeaway for this research is that DTW captures patterns more effective than the Euclidean distance. And companies which are in the three classes, we have the high, we can categorize them as high, moderate, and low investment return. And the majority of companies from the high performer is from healthcare industries and IT. And it also underscores the potential of DTW for financial analysis. So that's all from me. Thank you so much.
Thank you, Dr. Nurli Anida. Now we will open the floor for questions. Again, no question? Yes, please.
Yeah, sure.
Okay, regarding to the K-mean clustering, just a simple question. What is the minimum number of K that you are using in this set of data?
Minimum K?
Minimum number.
Okay, we if you look at the elbow plot, so there's no minimum number of classes that we set. It's just that because we don't know, we want to find the optimal number of clusters. So that's why we are actually running for all different numbers of clusters. So from 2 up until berapa? 8 macam tu, right? So and we're trying to find the most gradient number of clusters that if we plot like that, right? So that would be the optimal number of clusters, and we further confirm dengan with RAND index and DB index. So that's to ensure the similarity level, measures between the clusters, and inside the clusters are actually meaningful lah, and they are actually close together.
As I understand from this result, optimal number of cluster is actually a minimum result after you run the K-mean clustering, right?
Minimum number.
Minimum optimal number of cluster. And I believe maybe it have a more number of cluster
Okay.
when we do what I call it a distance. I just want to know starting calculation in K-mean, there must be a starting point of number, minimum number of K.
So we actually set the number actually.
What's that number?
That's
Start with what?
it can we start with 2 up until 8.
Okay.
Because we need that information in order to do the K-mean clustering.
Okay, that's all. Thank you.
Thank you for the question and answer. Is there any other question from the floor? How about audience from online participant? No. Okay, I think that's all for the second session. So thank you, Dr. Noli Anida, for the presentation. Selamat datang kepada Datuk Seri Muhammad, Datuk Seri uh, Dr. Uzair pada session ini. Okay, kita move to the last presenter, Miss Babyline Muntasir from Department of Mathematics, Faculty of Science and Mathematics, Universiti Pendidikan Sultan Idris, which the title of the paper is Performance Evaluation of Sarima Model for Solar Radiation Forecasting. Please welcome. Thank you.
Okay, Assalamualaikum dan salam sejahtera saya ucapkan kepada para hadirin yang dihormati. Saya Babyline binti Muntasir daripada Universiti Pendidikan Sultan Idris. Saya akan bentangkan kertas kajian kami yang bertajuk Performance Evaluation of Sarima Model for Solar Radiation Forecasting. Saya akan mulakan daripada introduction lah. Kemudian diikuti dengan problem statement, research objective, research question, methodology, result, discussion, and conclusion, dan terakhir sekali adalah references. So untuk introduction, the forecasted electricity demand per capita is expected to continue increasing due to population growth. The surge in energy demand underscore the need for efficient and sustainable energy solution, but at the same time, the environmental impact of energy production remain a significant concern. Traditional energy sources, especially those involving fuel combustion, contribute to air pollution and greenhouse gas emission. Addressing these environmental issues requires a shift towards more cleaner energy sources, and solar energy is one of the great renewable energy sources. So the problem statement is electricity demand and generation in Malaysia indicates that both will significantly expand year by year according to Azman 2021. Even though the empirical finding by Raihan 2022 shows that the coefficient of economic growth in Malaysia is positive and significant, Malaysia must plan well in order to maintain the consistent of economic growth and regain its historical high growth momentum. In this context, accurate solar radiation forecasting becomes crucial. Precise prediction can optimize the placement and efficiency of solar panels, thus reducing the overall cost of solar technology installation and operation. Since the solar radiation data often exhibit season and trend component, Sarima model is one of the model that allow for precise modeling of this variation according to Al-Rawsan 2021. This study aims to evaluate the performance of solar radiation forecast of Sarima model for solar radiation forecasting in Ipoh. So the research objective of our paper is to find the best imputation method for solar radiation data in Ipoh. The second one is to find the optimum Sarima model to forecast solar radiation in Ipoh. And the last one is to evaluate the performance of optimum Sarima model in predicting the solar radiation in Ipoh. And the research question is, what is the best imputation method for solar radiation data in Ipoh? And the second one is what this the optimum Sarima model for forecasting solar radiation in Ipoh, and how well does the optimum Sarima model perform in predicting solar radiation in Ipoh. So untuk methodology, daily solar radiation in Ipoh Perak from 1st January 1980 until 31 December 2021 diperoleh daripada Jabatan Meteorologi Perak. Kemudian data ini dibawa melalui 3 stage yang dinamakan sebagai data pre-processing, Sarima modeling, dan juga model performance evaluation. So di dalam stage ini terdapat beberapa kaedah yang mana kaedah ini telah dilaksanakan dengan menggunakan Python programming. So the first one adalah imputation method. Oke, terdapat 3 imputation method yang di-apply ke atas daily solar radiation data, yaitu mean substitution, random forest, dan juga k nearest neighbor. Dan ketiga-tiga imputation ini dinilai melalui 3 evaluation matrix, yaitu RMSE, NSE, dan juga MAE, root mean square error, Nash Sutcliffe efficiency, dan juga mean absolute error. Dan nilai terkecil bagi RMSE dan juga MAE, dan juga nilai yang paling dekat dengan 1 bagi NSE adalah the best imputation method. So seterusnya adalah data conversion. Data telah diubah daripada daily data kepada weekly data untuk mengurangkan complexity semasa programming lah. Oke, kemudian data dibahagikan kepada training set dan juga testing set, yang mana 50 data point telah dibahagikan untuk testing set. 50 data point ini merujuk kepada 1 tahun lah, sebab dah tukar kepada weekly data. Kemudian data normalization telah dilakukan dengan menggunakan box-Cox transformation. Kemudian seasonal dan trend decomposition. Oke, step ini pentinglah untuk dalam membantu kami untuk mengetahui seasonal period yang diwakili dengan huruf S dalam model Sarima, dalam Sarima model. Oke, seterusnya dalam Sarima modeling terdapat 3 kaedah, yaitu ensuring data stationary, di mana ensuring data kalau dalam data yang tidak stationary kami telah apply differencing, yang mana differencing ini terdiri daripada 2 type, yaitu regular differencing dan juga seasonal differencing. Regular differencing itu untuk buang trend komponen di dalam data, dan juga seasonal differencing untuk buang seasonal komponen lah. Oke, untuk parameter selection, apabila data sudah mencapai stationary, parameter selection diambil daripada SCF dan PSCF graph yang sudah di-apply differencing lah. Kemudian model selection ini dipilih berdasarkan 2 kriteria, yaitu p-values of the model coefficient dan juga Lijung box Q-test. Oke, untuk ini adalah result bagi our research paper, yang mana the best imputation method adalah random forest. Boleh lihatlah dekat situ RMSE dan MAE yang terkecil merujuk kepada random forest, dan juga nilai yang paling dekat dengan 1 bagi NSE adalah random forest. Kemudian untuk data conversion, hasil menunjukkan daripada 15.341 data telah di-convert kepada weekly data dan menghasilkan hanya 2.191 weekly data point sahaja. Kemudian Okey, untuk data normalization, kita boleh lihatlah dekat graf warna kuning ni sebelum apply box-Cox transformation, the distribution slightly skew to the right, dan selepas apply box-Cox transformation, the distribution lebih mencapai simetri, lebih normal lah. Okey, seterusnya. Ni untuk seasonal and trend decomposition of weekly transform solar radiation training data. Yang paling atas merujuk kepada graf original. Kemudian graf kedua adalah trend component yang terdapat dalam original data. Dan ketiga adalah seasonal component yang terdapat daripada original juga. Dan residual adalah data yang original data yang telah dibuat tiada trend dan komponen, seasonal component. Itu saya daripada saya. Sekian, terima kasih.
Thank you, Miss Babyline Muntasir, for the interesting presentation. Now we will open for question for the floor. Any question? How about?
Hello.
Okay, yes, please.
I have one question. Your data set have 6% NA, right? Just now you show the imputation method. So it's only 6%. So why do you choose to impute instead of just remove the NA?
Sebab ada beberapa artikel yang menyatakan bahawa adalah lebih baik kita impute the data daripada buang, sebab untuk mengelakkan the pattern of the data tidak dapat ditangkap sepenuhnya oleh model.
Okay, thank you. Because if we impute, so it's like double. Wouldn't it be like double error? Because never mind. Okay, thank you.
It's okay, we can discuss this matter.
Yang imputation method, maksudnya dia double.
Because imputation is like you're predicting the MT, right? The NA prediction. So you already did a prediction there, and then you use the data that you predict to predict again. So never mind, it's okay. I'm just asking about why you choosing impute instead of remove. I get the answer already. Thank you.
Degree.
But degree is okay, but just those who are doing PhD. This is the reason to answer his question, you should do simulation study to see that which is better. Like, should I do imputation or should I just delete the data to see that which actually gives me better result? Only by simulation you can know which is a better choice. You know, you buat degree lagi, it's okay. Tapi bila next time bila buat masters ke PhD. Because I notice a lot of PhD students now, they omit the simulation part. And they just decide based on other people's result to either do imputation or some delete. So kita takkan tahu percentage apa yang paling sesuai untuk buat imputation ataupun delete. So the best way to get the answer is buat simulation. Simulate data, then you'll know which is better and which percentage should I use imputation or which is better, should I just omit the data. I think you follow what I'm trying to. It's just a suggestion, not a question.
Okay, terima kasih.
Thank you, Doctor, for the response. Any other question or want to respond regarding the previous question? I think mainly we don't have to delete instead of impute because it is time series data, right? Because otherwise it will disturb the sequence of the data. Right. Okay, any other question? Okay, this is our last presentation. your opportunity. So if there is no other questions, so we will like to thank again to Miss Babyline Muntasir for the presentation. So thank you to all our presenters for their excellent contribution today. I would also like to thank I would like also to thank the audience for your attention and participation in this session. I hope everyone has gained valuable insight from the presentation. That concludes today's session, and I will now hand the floor back to the organizer. Thank you.
Ladies and gentlemen, allow us to express our deepest gratitude to the moderators and all the presenters. As a token of gratitude and appreciation, we invite Yang Berusaha Puan Noraliza binti Muhammad Ali, a Director of Industrial Production and Construction Statistic Division from Department of Statistics Malaysia, to deliver the souvenir to the moderator and presenters. We invite Yang Berusaha Dr. Maria Elina binti Noor as a moderator to receive a token of appreciation. Next, we invite the presenter to receive the souvenir. First, Mr. Muhammad Nur Hakim bin Muhammad Rosli. Next, Dr. Nur Lia Anida binti Abdullah. Okay, and lastly, one more. Okay. And lastly, Miss Babyline Muntasir. And lastly, I will invite Yang Berusaha, Dr. Maria Elina, and all the presenters to front for the photo session. Okay, with the end of the photo session, so today's presentation session has now ended. We would like to extend our heartfelt gratitude to each presenters and their co-authors, moderators, judges, repertoire officers, and all of the guests for their participation and contribution to this scientific paper parallel session event. Your presence greatly contribute to this success of this event, and we greatly appreciate your support. We are looking forward to see you in the same event next year. So with that, wabillahi taufiq wa hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.